Meta has climbed 340% since 2022, while Apple has climbed around 85%. Both are potentially setting up for fresh buying opportunities, but which one is the better stock? Both are tech stocks, so are they as good as each other, or is one a superior investment? These household names have not only revolutionized how we interact with technology, but have also made some serious waves in the stock market. So let's unpack their stories, their impact, and what the future might hold for these tech behemoths. Let's start with their humble beginnings. It's crazy to think that both of these trillion-dollar companies started in such modest settings. Meta, originally Facebook, was born in a Harvard dorm room back in 2004. Mark Zuckerberg and his fellow students had this wild idea to create a platform where people could share their lives online. Little did they know they'd end up connecting billions of people around the globe. Now, Apple's origin story is just as fascinating. Picture this, it's 1976 and Steve Jobs and Steve Wozniak are tinkering away in a garage in California. Their goal? To create computers that anyone could use. From that garage came the Apple I, and the rest, as they say, is history. Both companies share this incredible journey from small-scale projects to worldwide phenomena. It just goes to show that with the right idea and a ton of perseverance, you can change the world. Who would have thought that a college social network and a computer built in a garage would evolve into companies that shape how we communicate, work, and entertain ourselves? Now, let's talk numbers. Meta went public in May 2012 at $38 per share. It was one of the biggest tech IPOs in history, valuing the company at a massive $104 billion. But it wasn't all smooth sailing. On the day of the IPO, technical glitches on the Nasdaq delayed trading and caused confusion amongst investors. Despite these hiccups, Meta, then Facebook, raised $16 billion through its IPO. Apple, they hit the stock market way back in December 1980 at $22 per share. At the time, it was one of the largest IPOs since Ford went public in 1956. The IPO generated more capital than any other IPO since Apple's own debut and instantly created about 300 millionaires. Since Meta's IPO to its current all-time high in September 2024, it's climbed an astounding 1,240%, which is pretty impressive. But Apple has skyrocketed over 215,000% since its IPO in the 80s. To put this into perspective, if you had invested $1,000 in Apple's IPO and held onto your shares through all the splits, your investment will be worth over $2 million today. Of course, hindsight is 2020, and it's easy to look back and wish we'd all invested in Apple back in the 80s. But it's a testament to the power of long-term investing and believing in a company's vision. It's not just about how high they've climbed, it's about the journey getting there. Both companies have faced their fair share of challenges and triumphs. Meta's growth has been nothing short of explosive. They've expanded their platform, gobbled up Instagram for $1 billion in 2012, which seemed like a lot of money at the time, but looks like the deal of the century, and acquired WhatsApp for a whopping $19 billion in 2014. These acquisitions have helped Meta dominate the social media landscape. They've become an advertising powerhouse, leveraging their vast user database to offer highly targeted ads. In fact, in 2023, Meta's advertising revenue accounted for over 97% of its total revenue. That's a double-edged sword though. While it's incredibly profitable, it also makes Meta vulnerable to changes in the advertising market as well as privacy regulations. Meta's constantly innovating, pushing into areas like virtual reality with Oculus. The $2 billion acquisition of Oculus in 2014 was a bold move into the VR space, signaling Meta's ambitions beyond traditional social media. But it hasn't been all smooth sailing. They've faced scrutiny over privacy concerns, especially after the Cambridge Analytica scandal in 2018, and have had to adapt to changing regulations. Apple, on the other hand, has been the master of reinvention. From computers to iPods to iPhones, they've consistently created products that people didn't even know they needed. The introduction of the iPhone in 2007 was a watershed moment, not just for Apple, but for the entire tech industry. It redefined what a phone could be and kicked off the smartphone revolution. And let's not forget, there's services like the Apple Store and Apple Music, which have become massive revenue generators. In fact, Apple's services segment, which includes these offerings along with iCloud, Apple TV Plus, and more, has been growing rapidly. In 2023, it's accounted for nearly 20% of Apple's total revenue, providing a steady, high-margin income stream that complements their hardware sales. Apple's success isn't just about their products though, it's about their ecosystem. The seamless integration between Apple devices, your iPhone, MacBook, Apple Watch, and the AirPods, all working in perfect harmony, creates a sticky ecosystem that keeps customers coming back. Once you're in the Apple ecosystem, it's hard to leave. Now, here's where things get really interesting. Between September 2021 and November 2022, Meta and Apple took very different paths. Meta stock took a nosedive, dropping 78%. Meanwhile, Apple held steady, trading in a range that kept investors much happier. Why such a difference? Meta faced some serious headwinds. Apple's iOS privacy updates, which allowed users to opt out of app tracking, hit their advertising model hard. It's estimated that these changes cost Meta billions in ad revenue. They were also pouring money into the metaverse, a concept that many investors weren't sold on. In 2022 alone, Meta's Reality Labs division, which is responsible for its metaverse projects, lost nearly $14 billion. And let's not forget the increased regulatory scrutiny they were under. Concerns about Meta's market dominance, its handling of user data, and its impact on mental health and democracy led to investigations and hearings in multiple countries. All of these factors combined to create a perfect storm that sent Meta's stock plummeting. Apple, however, kept chugging along. Their diverse product line, strong brand loyalty, and growing services segment helped them weather the storm. They managed supply chain issues better than most thanks to their strong relationships with suppliers and their ability to secure components in advance. Their premium positioning in the market helped maintain their bottom line, even as other tech companies struggled. But here's where it gets really exciting for investors. Since that low point in November 2022, Meta has come roaring back, climbing 540% to its all-time high in September 2024. This remarkable recovery is a testament to Meta's resilience and its ability to adapt to changing market conditions. They made significant strides in addressing privacy concerns, diversifying their revenue streams, and demonstrating the potential of their metaverse investments. Apple, on the other hand, has continued its steady growth, rising 77% in the same period. While not as dramatic as Meta's rebound, this consistent growth underscores Apple's stability and its ability to continue innovating and expanding its market share. So the question is, what does the future hold for these tech titans? Meta is betting big on the metaverse. Zuckerberg has staked the company's future on this vision of a virtual world where people can work, play, and socialize. It's a risky play, but if it pays off, it could revolutionize how we interact online. They're pouring billions into developing the hardware and software to make this a reality, from VR headsets to avatar systems. They're also doubling down on AI and machine learning to improve their advertising platforms and content recommendation systems. Potential is huge, but so are the challenges. Regulatory hurdles, privacy concerns, and the need to win back public trust are all factors they'll need to navigate. Apple, meanwhile, continues to innovate in their product lines. They made a big push into services which now account for a significant portion of their revenue. They're also exploring new frontiers like augmented reality and autonomous vehicles. The long-rumored Apple Car project, codenamed Project Titan, could open up a whole new market for them. Their focus on privacy as a key differentiator has resonated with consumers and could give them an edge as concerns about data protection continue to grow. And let's not forget their brand power. People line up around the block for their new releases, a level of customer loyalty that most companies can only dream of. So, given everything we have gone through, which one should you invest in? Meta or Apple? Their stock performance over the years tells us a lot. Both stocks have a history of rewarding their investors, but come with their own unique challenges. Facebook declined 78% due to the company falling foul of the law, but the recovery shows that this could be behind them with even greener pastures ahead. However, you just don't know what Zuckerberg may pull next to cause the stock price to plummet. It's definitely the riskier little brother that can behave but can have wobblies too. Apple, on the other hand, is often seen as a more stable investment, a sensible big brother to Meta. The stock requires patience as it is prone to deep corrections and long sideways markets. If both stocks continue to set record highs, then here's a little tip. Both could be potential for your portfolio. Take small positions on both stocks, risking no more than 1% per position. Ensure you have a well-placed stop loss. I've talked about this in previous videos. Look at the ATR, the average true range, over say 30 days, and multiply it by a number, anywhere from 4 to 8, depending on your account size and experience. The wider, the better for me. If they fail, the trend has clearly reversed with a wide stop loss. And remember, you will only lose 1% per stock. However, if one or both start returning a profit, strategically buy more of the stock, using the same 1% position sizing while removing risk on the previous position. This is known as compounding. This way you cap and protect the downside while maximizing the upside through letting winners run. If the bulls take a hold of the market for another strong run and the Nasdaq 100 follows the S&P 500 by setting record highs in the coming days, Meta could potentially hit $1,000 per share in the next 12 months, while Apple could be aiming for $500, the next major round number for both of these stocks. The tech world moves fast and anything can happen, so you need to be calmly prepared for all eventualities. But remember, the odds are always with the bulls until they aren't. My philosophy is to always side with the bulls, but protect myself from the bears. Both Meta and Apple are at the forefront of emerging technologies that could shape our future. Meta's work on the metaverse and AI could redefine how we interact with the digital world. Apple's rumored forays into augmented reality and autonomous vehicles could open up entirely new markets. But they also face significant challenges. Both companies are under scrutiny for their market dominance. Regulators around the world are looking at ways to rein in on big tech, which could impact their ability to grow and innovate. They're also competing for talent in a tight market for tech workers, especially in fields like AI and machine learning. Although both of these stocks have a proven history of performance and have performed well for investors, Meta currently has the advantage as it has already broken out and is setting record highs. If you see the potential in Meta, you will want to go deeper. So check out my detailed review. Click on this next video to see if Meta is a buying opportunity above $550.